Today I'm going to talk about one of my trades I did last week, and I did 13 trades. I said that in my previous videos. I got a sign on two of my trades. And I realize as an options trader, I'm just talking a lot of different options trading terms like assignment and strike prices. So I'm going to try to slow it down. A lot of my viewers are not options traders, and this is new terminology. So let's talk about assignment. When you get assigned as an options seller, I sell an options. I bet that the future price will not go below, say, $100. If the price finishes, it closes below $100 by the expiration date, and I do weekly options, which is Friday. If it closes below that expiration date, then I am obligated, I'm on the hook to buy at the strike price that I bet on, which is $100. So on Friday, they will assign me, and then on Monday, I will buy 100 shares of that stock at the promised price of $100. And one of my trades, ARM or ARM, I had put a strike price at $115. That was last Monday. I collected by selling one put option on ARM. I immediately made $45, and that money went into my brokerage account, so I got paid upfront for that and just waited. And then on Friday, the price closed slightly below $115. So I got assigned to buy 100 shares at $115. So for beginners, that is assignment. Today's video, I'm going to walk through why I did what I did to take profit and move on. So let's jump right in. Here's my trade. I took screenshots of my trade. Monday, December 15, I had sold one contract of put options on ARM, and I had picked a strike price of $115. So options have expiration date, which was December 19th, right? So that's the Friday of that week, Monday, December 15, and it expires December 19. And I picked a price that's lower than the current price, and I had picked $115. And during the week, ARM stock price dropped continuously every day. And you can see that I sold it at 45 cents a share. One options contract is equivalent of 100 shares. So I would multiply 0.45 times 100, which gave me a payout of $45. And I had talked about in previous videos how these payouts are small and tiny, insignificant to you. Over time, you do these week after week. And not just one trade, you do multiple trades. That's how I do it, 13 trades, and they do add up. They do stack up. And then you move into long-term investment and let time compound those small gains over years, over decades. That was the trade on Monday with $45 payout minus the commission and the fees. Then the following Monday, which was today, December 22nd, the price had finished under $115, so I was assigned to buy 100 shares at the strike price that I had bet on, $115, and this is how much I had to pay for my brokerage account to purchase 100 shares at $115. Now, looking at the pre-markets, ARM was up. And so I had decided to sell the shares that I was assigned and sell it for $116.20, which means the difference 116.20 minus 115 gave me a difference of 1.2 times 100. So I sold my position pre-market and made $120. So total 120 plus the 45 gives me $165 in one of my positions. Now you might be wondering two things. Why bother trading if you're only going to profit $165? Number two is, why did you sell out of a stock that you believe in? I do believe in ARM. I do like this stock, and I will tell you why. First, let's look at the charts quickly. ARM on the daily chart. I'm going to zoom out just a little bit. Now, what I like to do is kind of flip through the weekly charts here. So to zoom out, and let me draw a trend line. I drew a trend line connecting this point to this bottom, and this concerns me, right? If it comes down to touch support here, then we're looking at a possible drop anywhere 10% plus. And that would land at anywhere between, let's see, $90 to $100. So that's very, very possible. Now, if I do a fib retrace, and I had talked about these different chart reading signals in previous videos. These are the most basic fundamental signals indicator tools that I use. I limit it to 4 plus 1. All right, fib is the plus 1. It's a little bit more advanced. Here's the fib retracement in action. And you can see the levels that it can pull down to. It's past the 50.5, it's past the 120, and now the next level is at about 102. It's very possible that it can come down to this level. Now, if we look at local weekly support, we're looking more at about $100. Now you can see we have an intersection, the trend line, support, and the fib retracement right around here at about $100, which makes sense. $100, good psychological price level. People like to round off numbers, and $100 price target that's below the current market price makes sense. It's very plausible. From a technical chart perspective, price can fall further. Now, it is the end of December, and so I do expect a Santa Claus rally, but price can swing either way. And I like to take risk off the table, just cash in on my profits, even though it's not that much, right? I got the premium, I got the capital gain. Together, it's not a whole lot. $165. But it's better than losing money. And let me show you what happened. So the pre-market, it was up. In fact, I think it was, let's take a look. You can see that the price opened at 117. So it went up to 117. I had sold a little bit lower than that at 116.20. I missed out on about $100 in profit, but it was still profit. I'm okay with that. You don't have to try to chase the full maximum amount for the day. 117, but look where it closed. It closed at 113.20. If I held on to the stock, then I sold at 116.20, it closed at 113.20. That's a $300 difference. So I took profit, I'm happy with that. Number 2 is asking ChatGPT. So everything right now is just following price action on a stock chart. Let's see what ChatGPT has to say about ARM. I lied. It's not ChatGPT. We're going to use Gemini 3.0. Google has access to the latest information. Unlike ChatGPT, their information tends to be outdated and they can't access websites. Gemini knows everything. And here's the extent of my AI trading tool. Simple prompt. Give me both the pros and cons of why I should invest in ARM stock. And I say invest because that's one of my core rules, is that you have to be okay with owning the stock in the long run. Now let's see the response here. Investing in ARM, they hold a near monopoly on mobile processor architecture, which is a very good reason, solid reason why this company is a great stock to invest in. And then here are the pros. All right, so they're well into the AI space. They have huge gross margins, near 95%. So they make a lot of money. And they are one of the major players in the Stargate AI project, a massive multi-billion-dollar venture. So that's all solid reasons. The cons, and this is more important than the pros, because it keeps my expectations in check. And everyone's all hopeful when they buy stocks that it's just going to go straight up. But sometimes having a dose of reality check is good to have, so that you're not surprised, you're not caught off guard if the market moves against you. And take a look at this. Extremely rich valuation, PE of 50x times 60x. All right, so it's already overpriced for perfection. Now look at this. There's competition from China, and China's coming up with their own similar chip, mobile processing chip, and China, as you know, has grown massively, rapidly in their technology in every industry, from coming up with their own GPU chips to train AI models. Huawei has come out of near bankruptcy and developed their own Harmony software to compete with the Google Play, and their software is amazing. Look at TikTok, right? So don't count China out. There's geopolitical risk with China because about 20% of ARM's revenue comes from China. And here's another concern. SoftBank owns 90% of ARM. And recently, SoftBank has dumped a lot of NVIDIA shares. And if they decide to liquidate ARM shares as well, and if you get caught in that, then there's a lot more further downside in prices. I hope in some way this can help you in your future trading and give you a little different perspective on how there are other ways where you don't have to be locked down to a computer screen all day and hoping for the best when you're day trading. If you enjoyed today's video, you found it helpful, please subscribe and look out for future videos where I will continue to share my thoughts and insights based on my experience with real life trading. Have a great day. See you next time.